Welcome to Global Money Talk, brought to you by Sampro TV. Greetings to all of our viewers from across the U.S., Korea, and around the world. We're coming to you live from the floor of the New York Stock Exchange in New York City, the financial capital of America. I'm Remy Blaire, and today I'm joined by Tai Wong, independent proprietary trader. Tai, happy Thursday. Thank you so much for joining me.
Oh, it's great to be here. Great to be here. Is it really only 14 days till Thanksgiving?
It is. Isn't it hard to believe?
Wow. Well, at least the weather finally feels like the last couple of days. I had a coat on because it was, I think, 32 degrees in the suburbs where I am. But today is National Pickle Day. Are you a pickle fan? Are you a pickle fan?
I am. I'm actually a pickle fan.
I like pickles, okay, but I really like them deep fried. I think the deep frying with the, like the nice sour tartness really makes it, a delicious sort of appetizer. And today also, former Secretary of State Condoleezza Rice's birthday and Claude Monet.
Well, I think that's quite an interesting combo there, because I think when we think about pickles here in the U.S., fried pickles, something that might be considered a bit strange overseas.
Yeah, I mean, you don't see it very often. I've been to a number of restaurants, and they offer them, and I always like them because it's just a little bit different than the usual fried things. And it's something like, I don't really like to fry things at home. First of all, it uses a tremendous amount of oil. It's not so healthy, and then you have to throw all the oil away. So it's a sort of the treat that you always like to have when you're at a restaurant.
Well, speaking of food and other things we're paying attention to this morning, we got inflation figures out. And in terms of the market, we're not seeing much of a change from yesterday, nearly flat. We opened on a mixed note, and here we are at the 11 o'clock hour, and we're seeing the major averages, the Dow, Nasdaq, S&P 500, hovering right below the flat level. But what do you make of everything that we've seen so far this week, since this is the first time we're speaking after the inflation figures?
So the CPI data yesterday was on the screws. It couldn't have been more consensus. So I think the market liked that. The PPI this morning was a little more troublesome. Month on month, it was basically in line with consensus. But year on year, it's a tenth higher because last month's was revised a tenth higher. And these numbers, PPI north of 3% is going to, at some stage, make the Fed pause and think about it. I think you will get 25 basis points in December. In fact, 83% of the market has that in terms of where the CME futures are. The Fed will get 25 basis points. It seems that unlikely that will change, but after that, we'll have to think about it. And as a matter of fact, a whole host of Fed speakers have come out over the past few days. Schmidt of Kansas City, Musalam of St. Louis, and even Adriana Kugler, who actually happens to be in Uruguay, came out and said, we really want to be watching both sides of the market. And Kugler is considered, although she's a pretty new Fed governor, considered sort of left-leaning, maybe a little dovish. So for her to say we need to look at both sides, I think is meaningful. So the Fed, I think, is setting itself up for a 25 basis point move in December. It will be interesting to see where the summary of economic projections or the dot plot ends up. But right now, the data is getting less reaction from the market because the next Fed meeting and the next Fed move is pretty set. Thereafter, in the new year, data will have a lot more importance.
Yeah, and as you mentioned, Fed rate expectations for a rate cut in December. We saw that climb yesterday following the release of consumer prices. So that is something to keep our eyes on. And I do want to mention Fed Chair Powell. He is going to be speaking in Dallas later today at 3 p.m. Eastern Time. So we'll see what comes out of that. And of course, as we head into tomorrow's session, we get a picture of how consumers are doing with retail sales coming out tomorrow morning.
A couple other little pieces of data to mention. Mortgage rates backed up, I think, another 7 or 8 basis points yesterday. Mortgage applications very subdued, refinancings very subdued. That will likely not change until the market is convinced that we won't get any further cuts, or until we get the next cut, which will be almost certainly in the middle of December. So expect those of the mortgages and the housing to be sort of subdued. And excuse me, jobless claims that
Yes.
we got this morning, 217,000, also very subdued after that big 2 week spike that we had due to the hurricanes, and the lowest since May. We're talking about 1,000, 2,000 claims here, so it's not big, but what we're seeing is just steady 215, 225. That's not going to make the Fed really, really worry. Another reason why data is at this moment relatively quiet in terms of affecting the markets. It will change in the new year.
And of course, we'll have to keep an eye on jobless claims ahead of the bigger employment report that is coming out in December. So we did an overview of what we're paying attention to in terms of economic data. So let's shift our focus on over to Washington, D.C., what's happening and unfolding in the nation's capital. We're here a week after the election, and of course, we're keeping an eye on the movement that's happening in D.C.
So it's politics, really, but at the end of the day, politics matters to the markets, especially if someone said that the whole markets thing is a confidence game, and it's not a confidence game in that you're trying to steal or fool people, but it's a confidence game in terms of the market reacts to how confident they are in what's going on. And this is a new incoming administration. They've actually been really, really fast in naming, excuse me, in naming some very, very senior appointments. Just to go over them very, very briefly, the new DOGE department, the Department of Governmental Efficiency, run by Elon Musk and Vivek Ramaswamy, who ran also for president on the Republican ticket in the primaries, but has become a Trump supporter. We're going to get back to that a little bit later. But Secretary of State Marco Rubio, generally well received. He'll be easily confirmed. Kristi Noem, the governor of South Dakota for Homeland, that's going to be fine. John Ratcliffe, pretty well received as CIA. Mike Waltz, no relation to Tim Waltz, spelled differently as well, going to be running the NSA. Then a little bit of a surprise was Tulsi Gabbard, who was formerly a conservative Democrat, who is now the head of director of national intelligence. So that's a portfolio that sits on top of other portfolios where it's really a coordination of the intelligence agencies that was a result of 9/11. 9/11, we didn't do really well talking to each other. So it's not so much the nuts and bolts, but I think sitting over the umbrella agencies, a surprising pick, but nothing too controversial. A controversial one has been the Secretary of Defense, Pete Hegseth, who's only 44 years old, has been a reservist and has served in Afghanistan and Iraq. A broadcaster, sort of like us. I guess I'm arrogating my role. He's much more important than I am, but on Fox and Friends has been a very, very strong defender of veterans' rights, and a surprise because he's an outsider. The Secretary of Defense tends to be an insider, usually from the military or closely associated with the military. And it's a huge job because it oversees 2 million employees and an $800 billion budget. That's a big, big bureaucracy. I mean, I think the only thing comparable might be the Catholic Church. And even the Catholic Church, I think only has 400,000 priests, and a lot of folks supporting it. And I'm not sure the Catholic Church budget is as big as the Pentagon's, but it's a big, big job. So the interesting thing will be, can an outsider ride this gigantic bureaucracy where they're set in their ways, they like how they do things. It will be interesting to see, but it's good to have someone maybe outside trying to make some changes, because certainly there's some changes. There's probably waste. There's some probably problems with the military. They can't recruit people to join the armed forces, and that's a big issue with an all volunteer armed forces. So an interesting pick, and I think hopefully a very successful one. The one that got everybody riled up yesterday when it came out in the wire was Attorney General, Congressman Matt Gaetz. And I think I would summarize the reaction was something of, Really?
That's a very extreme reaction, right?
I think that was what most people thought. In fact, some of the senators were, well, that name wasn't on my bingo card.
Mm-hmm.
So Matt Getz, for the people, for our viewers who don't know, is um, a MAGA, very effective bomb thrower. If you hear him grill witnesses in Congress, he's actually really good at that. Unfortunately, he's also somewhat disreputable, and has been accused of relations with very young women and possibly involving drugs. I would say that the Department of Justice decided not to charge him because they thought the witnesses were unreliable. So this is a big surprise, especially, and we talked about this on Monday, Susie Wiles as chief of staff. She's from Florida, and Matt Getz's family, his father was a very influential state legislator in Florida, and he's from Florida. She knows everything that's going on in Florida. So you're thinking, this pick is very, very odd, and I think there may be a lot of undercurrents behind it, because he immediately resigned as soon as he was getting the appointment. And that coincides with the fact that the House Ethics Committee report on these concerns was due at the end of the week. By immediately resigning, the House Ethics Committee drops that report, or certainly they won't release it because it is no longer sort of under their purview because he's no longer a House member. Remember, it's an ethics review, it's not a criminal or civil review. So that gets put under the rug. What's really interesting is hard to see how he'll be confirmed even with 53 Republicans in the Senate in the new term, because there are a lot of folks, the moderates like Shelley Moore Capito, Susan Collins of Maine, Murkowski of Alaska, and even the traditional Republicans who are a little bit taken aback by this. So it may be a situation where this is a good way for him to, if he makes it, amazing. If he doesn't make it, he gets out of that ethics report coming out, and he gets to go do something else. Now, if I were the Democrats and he doesn't withdraw, I might actually vote to confirm him, just to embarrass the Republicans, because it is really an outlier of a pick.
And Tai, I think you've given us such a great overview of a lot of the appointments, a lot of potential changes that could be coming down the pike in the nation's capital here. And it was just earlier this week on Monday that we were talking about potential picks, and already just a week after the election, we're starting to see some names roll in, and I'm sure the next time that you and I are on air, we're going to hear even more names. But there are a lot of implications here, and we've been able to cover a lot of ground when it comes to the U.S. government, so we'll keep you all updated for sure.
I promised to come back to the Department of Governmental Efficiency,
yes,
so let's take a look
do.
at that. If we can bring up graphic number 8. So this is how is Elon Musk and Vivek going to make the government more efficient? Certainly Elon has done some remarkable things at X. He's fired probably 70% of his employees. I mean, and it seems to be working fine. So now, the government is much different than X, so much more complicated and harder. So let's look at the U.S. federal budget for this fiscal year. The graphic on the left is actually from Bloomberg, and I forgot to put the attribution in there. And on the right, from one of my favorite websites, Visual Capitalist. So they want to cut fat and inefficiency from the government, but it sounds great. It's been tried many, many times. And let's remember that DOGE, this Department of Government Efficiency, is not a real department that's funded by Congress. It's an advisory group. There are many, many advisory groups, and there's no necessarily a vehicle to put in what they suggest. But it will be very, very interesting nonetheless, because the Trump administration may be looking at ways to not spend money that's already been appropriated. How that works out remains to be seen. I think that's going to be a long struggle. But let's look at the budget. It's $6.9 trillion budget. Only 1.7 of that is actually discretionary. The rest, which is non-discretionary, is interest on the debt, which, if you can see on the right-hand side, is $900 billion. So let's round it up to $1 trillion with higher rates. Social Security is $1.5 trillion, the biggest part of the budget, and then you have Healthcare spending, which I think is Medicaid, $1 trillion. Medicare is not far from $1 trillion. So at the end of the day, out of that 6.9 trillion, you're really only getting 1.7 in discretionary spending, and that includes defense, which is about half of that. So at the end of the day, it's very, very hard to cut this budget in a very, very substantial way without, in some ways, raising revenue. And we had Larry Dyer, who said the best way to raise revenue is actually to raise the corporate taxes, which is a pretty small part of our revenue. And if corporations are doing very well, Larry's view was it'll be the least painful to the United States and certainly the citizens if you raise the corporate taxes to somewhere towards the middle of the OECD average. It's hard to see that happening with Trump, though you never know. But there is also a lot of waste. Now, in that, help the non-discretionary part of the budget, the estimation, and that's the Congressional Budget Office, says there may be $300 to $400 billion worth of waste. Now, if we can cut out some of that waste, that would certainly be great, because those are real dollars, and it would actually make efficiency efficiency real, and saying that we can actually cut things from this budget. So that's what I think the next 2 years or the next year and a half, what Elon and Rebecca are going to do. I'm actually very interested to see what they'll come up with.
Yeah, and as you mentioned, the government is quite different from running your own highly successful startup or even running a publicly traded company here. And it's quite different in terms of what you can do, what you cannot do, and of course, efficiency being the key word here, how quickly you could get things done. So it'll be interesting to see what transpires as we head into next year.
Absolutely, absolutely. And then I noticed this morning, Disney, we should actually take a quick look at the markets, but Disney's had a huge day so far.
Yeah, Disney leading the way higher following its earnings report. Earlier in the session, we saw shares of Disney up by as much as 10%. Right now, it does look like the gains have been pared back slightly. Disney up by 8% on the session, but they did manage to beat expectations in terms of earnings, and we also saw that their streaming platform has become profitable here.
So I think really it was the streaming platform that really boosted the stock so much. They beat on earnings, but they beat modestly. I think revenue was actually a little bit lower, but for the second quarter in a row, they had a big jump in sort of streaming income. I think last quarter might have been $25 million. This quarter was $300 odd million, and that was a big surprise for the market. Remember Disney? That's Disney Plus. That's Hulu. That's ESPN Plus. I have all of them. Actually, do I have ESPN? I do have ESPN Plus.
You do.
It comes as a package of one of my other things, maybe even through Verizon or something. And I watch a lot of Hulu. My youngest daughter loves The Rookie. It's a really, really good series. And we always laughed at the Sky Rizzi, the huge commercials on Hulu. They're 2.5 minutes, which is great for getting a snack, going to the bathroom, letting it run. And as my daughter says, Dad, you can't pause it. And, it doesn't continue to run after you pause it. You actually have to let it run. So not so bad, but we always laughed at some of the ads, especially my favorite, the Sky Rizzi Crohn's disease ad. Very serious disease, but Sky Rizzi, don't take Sky Rizzi if you're allergic to Sky Rizzi. I've seen it 100 times and it always makes me smile. But streaming has been difficult for almost everybody except Netflix, which is why Netflix has done so well. If they can really get streaming going, that's going to really help the stock. And I think that 14% jump on the open, and we've given most of that back. Sorry, not most, but given 6% of that back. So I don't know how Disney will end up, is certainly going to help. And I think also, now Disney is back up to, within sight of the highs of the year, but well short of the historic highs they reached post-pandemic, around in the 200 area. But the one good thing about Disney is it seems to be they're trying to put the culture wars behind it with DeSantis against Trump. And probably a good idea. I mean, you're an entertainment company and you entertain kids. Probably shouldn't get too deeply involved in politics.
Yeah. Interesting intersection, as you mentioned, between entertainment and politics here. And as you mentioned, Disney is not that far away from its all-time highs. Its 52-week range on the top end being 123. It does look as though we're holding above 110 today, up by 7%. So another area, Tai, that I do want to get your take on is precious metals, in particular gold, because in today's trading session we are seeing gold below that 2,600 level. So what is going on here today?
Well, I actually prepared a number of charts. I want to get the viewers to get a sense of where we've been since the election, and gold is going to feature prominently. So we'll go through them relatively quickly. Can we get graphic 1? I believe this is equity since the election. So I've labeled them this time because I remember that sometimes it's a little hard to see on the screen for myself as well as our viewers. So the S&P 500, this is as of the close yesterday, up 3.5%. The NASDAQ up 4.3%, and the Russell almost up 5%. And a number of people have talked about on the show as well that there's a switch into the small caps from the leaders of the S&P, and that this thing that might have some legs in terms of we get lower rates, it's really going to be good for some of these small caps. The question is, how much lower rates are we going to get? Let's go to graphic 2. Here's crypto, and crypto has had a remarkable run, led by Bitcoin over the weekend, up $1,000 in 36 hours. Now that is some rally. Bitcoin still up 18%, breached 90,000 earlier. I think it might have been yesterday or overnight. Maybe a little bit below that now, but up 18%. Dragged up Solana, up 10%, around the year highs. Even Ethereum, which has been struggling, has taken the coattails of 9%. And while the dollar index is up 1.6%, which is a lot for the dollar index in terms of it doesn't, the dollar index volatility is probably 5. It doesn't move all that much, but it's a big move for the dollar index, especially dollar yen up at 156. It's a question of will the Japanese government come in, and I think it's a Ministry of Finance to actually come in and sell dollar yen down a little bit. I think as long as the move is orderly, they might not. They might let it run its course a little bit. Why waste the reserves? So they have plenty of reserves. Let's go to graphic 3. I wonder if this is the one with gold. Oh, that's bond yields. Gold. So gold is next. So here are the bond yields since for the different curves since the election. I think it's just worth taking a quick look at. The 30-year bond up 20 basis points. That's the mortgages. So that's really important. The 10-year benchmark up 19 basis points, and then things that are closer in, 17 basis points in the 5-year, 12.5 in the 2-year. You can see that the curve has steepened as it was sort of expected to. Not dramatically yet, but we're only about a week into the action. And finally, as you mentioned, let's get to precious metals. Graphic number 4. Oh boy, oh boy, oh boy. So gold down, I think it was down further, it is down a little bit further today. Gold is down 7%, spot gold 7% since the election. Silver 8%, and copper is down 9%. In a little while, I'm going to get to those specific candle charts because this is great in terms of comparisons, having line charts. But to really see and get a feel for the markets, you do want to go to the charts themselves. And then palladium is down an awful 14%. I think it's down 13 days in a row. So let's go to graphic 5, as I promised. Let's look at some pretty ugly charts. This is ugly number 1, gold. It's down 8.5% from the 27.90 high on October 30th or 31st. That is the worst drawdown of the entire rally. And if you look at those candles, this chart it doesn't look really too healthy. And well below 2,600, I think we may have a little more room to go down. I do actually want to mention that, how tough, I've always thought that you want to trade gold and not necessarily the miners. The miners have a really difficult time. And as an example, when I saw this story, the country of Mali wants $160 million more from Resolute, which is an Australian mining company. They said back taxes or whatever they happen to be out of this mine in Mali, and they're holding the CEO and detaining him and not letting him out of the country until they pay. So just to say, mining is a tough business. Let's go to graphic number 6, ugly chart number 2. That's copper. And copper is down 15% from the September 30th highs. Those highs were reached after China looked like they were going to do cut rates, do a big stimulus, and copper is really China. Dr. Copper is really the doctor that tells you about how China is doing. 15% drop. It's below 9,000. I know this chart is actually in cents per pound because I couldn't get the the tons per dollar chart, but below 9,000 has been fairly good support. But if you look at China and what they've done so far, they're not really blowing anybody's socks off. So there is capacity for copper to drop substantially lower. Maybe not immediately because the momentum seems to be slowing down, but it definitely wouldn't surprise me to go down to 8,000 at some point if tariffs come in and the stimulus doesn't come in. We're not sure, but I'm actually quite more wary of copper in some ways than I am of gold. I think the investors will come back in gold in relatively short order, but I'm not so sure about copper. And finally, ugly number 3, a really, really ugly chart, and that's palladium. Look at that. Look at that on the right. 13 straight sessions in a row. Very similar to actually December of last year when it was squeezed higher because of some physical shortages, and the hedge funds and the speculators who really have hit palladium pretty hard. I think they've done the same thing. And if you look at that chart, I mean, that is just aggravated assault. It is a beat down every day. I think at some stage in the not too distant future they will take their profits, but it has, there's been some, and myself in particular, I've been medium term more bullish palladium. I've added a little bit. I might add a little more here because I think the EV mandates, the emissions mandates are going to be pushed back at least 4 years. And the market is moving away from simply plug-in electric, fully electric cars, more to hybrids, and that's going to require things like platinum and palladium. So I'm cautiously optimistic on palladium here, especially since the beatdown.
Yeah, and Tai, I think it was very helpful to get this overview through the charts, because if we zoom out and take an even bigger step back and look at where we are right now in terms of the major stock averages, year-to-date double-digit percentage gains, and Bitcoin, just for perspective, is up by over 100% year-to-date, so outperforming the major U.S. stock averages. And also ETH, as you mentioned, it has been taking a beating compared to Bitcoin, but it's still up about 30% year-to-date, so that is significant in terms of crypto.
It still is. It's been a great move. Bitcoin, I wouldn't surprise me if we saw 100,000 in relatively short order. And I'm afraid, I have some, and I'm afraid to sell it because I'm afraid to sell it and it doesn't come back. And that was the truth for precious metals. You took profit on gold, you had no chance to get back in. So let's see how far this drawdown goes. I'm not sure in the short term, but I think investors, there's no reason why, if you're an investor and you liked it all years, no reason for you to not like it now with the results of the election and what we're going to do. Now, if the Fed doesn't continue to cut, if they're concerned about next year, that may be adding to some of the impetus in terms of taking profits. But the belief in gold, I think, remains. Think there may be some profit taking here. And I think perhaps on the way back up, if this is substantial and lasts a while, I think the miners will not wait till 3,000 before they start to hedge. So a great year, probably a good year next year, but I wouldn't anticipate another 30% rally.
And you just mentioned the Fed, so I want to round out today's discussion by talking about the Fed speeches that we've heard so far. We have more on tap, especially with Powell this afternoon, but what do you make of the overall tone of officials speaking?
So the tone was interesting in that it was pretty uniform. I mean, it's Schmid, it's Lori Logan of Dallas, Kashkari of Minnesota, Musalam of St. Louis. They all sounded, we have to be careful about the data, make sure that inflation doesn't come back or get out of hand. And I mentioned Adriana Kugler, considered probably a dovish member of the Fed. They're all saying the same things, which is the Fed going, December is pretty much a done deal. Again, we'll watch Nick Timiraeus. If Nick Timiraeus has anything out the week before that, I'm paying a lot of attention. But they think the neutral rate is probably lower than where it is right now. They'll take their 25 basis points. I think that would get us to 4.25, 450, and that's actually nobody knows where the neutral rate is. Folks are thinking somewhere between 2.75 to 4.5. That'll get us into the top of the band of where a lot of people think the neutral rate could be, and then we'll see if the economy, if there is no landing and you're getting 2.5, 3% growth, you're probably not going to be able to cut too much further because inflation won't drop a lot lower than current. And with a 2% target, if inflation, core inflation is around 3% or a little bit above that, and headline inflation. Remember, a lot of headline has come down because of energy. If energy perks back up for whatever reason, those numbers are going to go from the high 2s back to around 3. And if your target's 2, you really can't, unless the unemployment rate skyrockets, you really can't cut too much further. So I think the Fed's saying, we know what we have to do for the rest of the year, but 2025 is a whole new ballgame.
Well, Tai, as always, thank you so much for joining me, and thank you so much for weighing in on the stories that you're watching in business news.
Great to be here.
Thank you, Tai. And that will do it for Global Money Talk live from the New York Stock Exchange. We're so excited to bring you daily coverage here on Sampro TV. You can check out the show anytime on our YouTube channel by searching Global Money Talk. Thank you so much for joining us. We'll be back tomorrow. Have a great day.